Hello everyone, this is Darren Thomas, Senior Tax Manager with Traphagen CPAs and Wealth Advisors. Today I'm going to talk about New Jersey's Pass-Through Business Alternative Income Tax, or as it's known by its acronym, the BATE tax. Before I get started, just a few words about our firm and my background. As you can see, Traphagen has wealth management and accounting and tax divisions that can assist you in just about any of your personal or business financial needs. For my background, I've been doing taxes about 17 years now. I'm a CPA. I also have a JD degree and hold law licenses in New York and New Jersey. I'm also an enrolled agent, which is a certification issued by the Internal Revenue Service. Now, I'm going to start out here by talking about some of the general provisions of the BATE tax. It started on January 13, 2020, when Governor Phil Murphy signed into law the Pass-Through Business Alternative Income Tax Act, or the Act for short. Now, the Act establishes a new optional, means it requires an election, business income tax for eligible business types, along with a matching income tax credit for owners of such businesses. It applies to taxable years beginning on or after January 1st, 2020, so it just started this year. Now, this law was signed into New Jersey law, in direct response to the 2017 Federal Tax Cuts and Jobs Act $10,000 limitation on the deductibility of state and local income taxes and property taxes on federal personal income tax return. Now, if you're filing married, filing separately, of course, we all know that that limit is only $5,000. All right, the Act allows eligible business types, called pass-through entities, or PTEs for short, to report and pay tax at the business entity level. An eligible PTE is a partnership, S corporation, or limited liability company with at least one member who is liable for New Jersey tax on income of the PTE. You'll see I put in caps here that single member LLCs and sole proprietorships cannot elect to pay this business tax. For a PTE to make an election, the owners must execute a consent agreement. The PTE election must be made annually on or before the due date of the entity's return. PTEs can revoke an election until the due date of the return for that tax year. Now, this entity level tax is imposed on the sum of each member's share of income at the following rates for taxable years beginning on or after January 1st, 2020. As you can see in the table of rates here, the rates start at 5.675% if the income of the PTE is less than or equal to $250,000 in the taxable year. Rates go to 6.52% of income greater than $250,000 but not over $1 million. The rates then climb to 9.12% of the income greater than $1 million but not over $5 million. And the rates top out at 10.9% of the income greater than $5 million in the taxable year. I'm just going to highlight some other provisions of note. If the business makes the election, it is required to file a business tax return and make payments on or before the 15th day of the third month following the business's taxable year for federal income tax purposes. Also, electing businesses are required to make estimated business tax payments on or before the 15th day of the 4th, 6th, and 9th month of the taxable year, and the first month succeeding the end of the taxable year. In addition to entity level filing requirements, electing businesses must also report an owner's share of income to its members. Now, in the last section here, I'm going to talk about tax planning. Well, the vital benefit under the new law is it provides a refundable tax credit on an individual income tax return for owners of an electing business subject to New Jersey gross income tax, which is equal to the owner's pro rata share of the business tax for the year. Now, the best way to show this is through an example where we have here a medical doctor who files married filing jointly and has $1 million of ordinary income from his 100% owned S corporation. This doctor also has real estate taxes in excess of $10,000, and also assume he has a 37% federal tax rate. Now, before the act, the gross income tax, the New Jersey gross income tax on $1 million of income would be about $72,658, and the taxpayer would not be able to deduct any of that tax on his federal return due to the $10,000 state and local deduction limitation, which has been used up by his state and local real estate taxes. On the other hand, pursuant to the Act, the taxpayer would have the option of paying an entity tax of about $63,088 that would be deducted from his $1 million income for federal income tax purposes. At the 37% federal rate, this results in a federal tax savings of about $23,343. In addition, the taxpayer would get a refundable tax credit of $63,088 on a New Jersey individual income tax return. Now, just assume that if this same medical doctor organized his business as a single member LLC or sole proprietorship, he would not receive any federal tax benefit for New Jersey state taxes paid on his $1 million of income. So, a review of an entity structure is crucial to determine if converting a single member LLC or a sole proprietorship to a PTE would maximize potential tax savings. Just a few more items related to tax planning. When calculating personal income tax estimates, you'll now need to take into consideration the refundable tax credits allowed on an individual income tax return in order to make sure you're not paying excessive tax estimates. The law also specifies that any credit is only available after the application of all other credits allowed by law and claimed by the taxpayer in the taxable year. If the amount of credit is bigger than that of tax otherwise due, then the excess amount of credit over tax will generally trigger a refund. A trust or estate which receives the credit can allocate the credit to beneficiaries or use against its tax liabilities. Taxpayers should review their business structure to determine if it makes sense to convert to a pass-through business structure to take advantage of the benefits afforded by the new elective business tax. And we saw that with our example of the medical doctor. To close out, we at Traphagen CPAs and Wealth Advisors can assist in your business entity structure review and provide valuable guidance. But you should know that there are time limits to act in order to have any changes to business structure effective as planned, so immediate action may be needed. Please feel free to contact Traphagen CPAs and Wealth Advisors today to make an appointment for a consultation. Lastly, I just want to thank everybody for watching and listening. My contact information is listed on this slide. Feel free to contact me with any questions you may have. And I hope everybody has a great day. Thanks so much.